Class 12 Accountancy Numerical Problem Solutions. Presented by NCERT.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Distribution of Profits Solutions, Problem 8 Solution. The problem statement is as follows. Ram, Raj and George are partners sharing profits in the ratio 5:3:2. According to the partnership agreement, George is to get a minimum amount of 10,000 rupees as his share of profits every year. The net profit for the year 2000 XA amounted to 40,000 rupees. Prepare the profit and loss appropriation account. So, as per the problem, we have to prepare the profit and loss appropriation account. If you carefully analyze the problem, we notice that this problem is just about the distribution of the profits, nothing else. It is given in the problem that the net profit for the year 2000 XA is amounted to 40,000 rupees. Now, we know that the net profit is nothing but a credit balance in the profit and loss account. For distributing this net profit, we prepare the profit and loss appropriation account. So, we need to transfer this net profit on the credit side of the profit and loss appropriation account. Also, as we are transferring this net profit from the profit and loss account, we need to debit the profit and loss account. Now, the preparation of the profit and loss account is not in the scope of this problem. So, let us leave out the profit and loss account related debit entry and let us directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. But first, let us prepare the format of the profit and loss appropriation account as it is not yet prepared. Let us first write the title as profit and loss appropriation account. Let us then write the headers DR and CR to designate the debit and credit sides respectively. Let us have the individual columns for particulars and amount in rupees on the debit side. Let us have the same columns on the credit side also. Let us then write by profit and loss account into the particulars column on the credit side. This indicates that the net profit is transferred from the profit and loss account to the profit and loss appropriation account. Let us then write the transferred net profit amount of 40,000 rupees into the amount column. With that, we have completed the credit entry related to the transfer of the net profit amount from the profit and loss account into the profit and loss appropriation account. Now, as we have already discussed, this problem is totally about distributing the net profit to the partners. So, there will not be any other entry in the profit and loss appropriation account and we can directly jump to the distribution of the net profit among the partners. Also, it is given in the problem that the partners share their profit in the ratio 5:3:2. Let us now calculate the share of the net profit of each partner as per this ratio. Before we proceed with the calculation, there is one thing worth noticing here. It is given that the partner George is to get a minimum amount of 10,000 rupees as his share of profit. He should not get less than this amount. It can be more than 10,000 rupees, but it should not be less than 10,000 rupees. So, in the working notes section, let us first write the header profit sharing to indicate that the upcoming calculation is related to the sharing of the profit among the partners. Now, let us also have a subheader to calculate the profit as per the profit sharing ratio. Now, the profit share of the partner Ram is equal to the total net profit amount of 40,000 rupees multiplied with his profit sharing ratio 5/10. Let us cancel the 0 in 10 for 1 0 in 40,000 rupees. Now, if we multiply the remaining 4,000 rupees and 5, we get 20,000 rupees. This is the share of the profit for the partner Ram. Now, the profit share of the partner Raj is equal to the total net profit amount of 40,000 rupees multiplied with his profit sharing ratio 3/10. Let's cancel a 0 in 10 for 1 0 in 40,000 rupees. Now, if we multiply the remaining 4,000 rupees and 3, we get 12,000 rupees. This is the share of profit for the partner Raj. Now, the profit share of the partner George is equal to the total net profit amount of 40,000 rupees multiplied with his profit sharing ratio 2/10. Let's cancel a 0 in 10 for 1 0 in 40,000 rupees. Now, if we multiply the remaining 4,000 rupees and 2, we get 8,000 rupees. This is the share of profit for the partner George. But it is given in the problem that the partner George should get a guaranteed profit amount of 10,000 rupees. But as per the profit sharing ratio, we are getting his share of profit as 8,000 rupees. Now, this 8,000 rupees is less than 10,000 rupees, right? So, we need to find the difference and adjust it from the share of profit of other partners. In other words, we will reduce the other partner's share of profit and adjust that amount to George's share of profit so that George would get the guaranteed profit amount of 10,000 rupees. By the way, we call this difference in the profit share amount as deficiency. So, the deficiency of George's profit share is his guaranteed profit amount of 10,000 rupees minus his calculated profit share as per the profit sharing ratio, which is 8,000 rupees. Subtracting, we get 2,000 rupees. So, this deficiency should be adjusted from other partner's profit amount. The question is, by how much we should adjust from each partner. It should be in proportion to their profit sharing ratio. In other words, in the ratio of 5:3. So, partner Ram and Raj should contribute to these 2000 rupees in the ratio of 5:3. Now, the contribution by the partner Ram is equal to the deficiency amount of 2000 rupees multiplied with his profit sharing ratio of 5/8. Note here that this denominator is 5 plus 3 equal to 8. It's not 10. Note this point. Now, cancelling with 8, 8 ones are 8, 250s are. Now, if we multiply the remaining 250 and 5, we get 1250. This is the contribution by the partner Ram to the deficiency in the partner George's profit amount. Now, the contribution by the partner Raj is equal to the deficiency amount of 2000 rupees multiplied with his profit sharing ratio of 3/8. Now, cancelling with 8, 8 ones are 8, 250s are. Now, if we multiply the remaining 250 and 3, we get 750. This is the contribution by the partner Raj to the deficiency in the partner George's profit amount. Considering these contributions, let us now find how much is the actual profit share of each of the partners. Now, the actual profit share of the partner Ram is equal to his share of profit as per the profit sharing ratio, which is 20,000 rupees, minus his contribution to the partner George's profit share, which is equal to 1250 rupees. Subtracting, we get 18,750 rupees. Now, the actual profit share of the partner Raj is equal to his share of profit as per the profit sharing ratio, which is 12,000 rupees, minus his contribution to the partner George's profit share, which is equal to 750. Subtracting, we get 11,250 rupees. And finally, the share of profit of the partner George will be equal to his guaranteed profit amount of 10,000 rupees. Now, for posting these profits, we should debit the profit and loss appropriation account and create the partner's capital account individually for each partner. Now, the preparation of the partner's capital account is not in the scope of this problem. So, let's leave out the partner's capital account related credit entry and let's directly post the profit and loss appropriation account related debit entry into the profit and loss appropriation account. Let us first write the subheader profit transfer in the particulars column on the debit side. Let us then write to Ram's capital account. Let us then write 20,000 rupees minus 1,250 rupees to give an idea of how the partner Ram's profit share is calculated. Let us then write his profit share amount of 18,750 rupees. Let us then write to Raj's capital account. Let us then write 12,000 rupees minus 750 rupees to give you an idea of how the partner Raj's profit share is calculated. Let us then write his profit share amount of 11,250 rupees. And finally, let us write to George's capital account and his guaranteed profit amount of 10,000 rupees. Now, the total profit share of all the partners is equal to 40,000 rupees. Let's write this amount in the amount column. Now, the total on the debit side of the profit and loss appropriation account is 40,000 rupees. Similarly, The total on the credit side of the profit and loss appropriation account is 40,000 rupees. So the profit and loss appropriation account is balanced. With that, we have come to the end of this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.